This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Monday, November 3rd, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, December corn up a penny at 432.5. January soybeans were up 4 1/4 at 11.19.5, and December Chicago wheat was up 7 at 541. Government's still shut down, so we still got no export sales announcements. We did get the final RMA fall discovery price for crop insurance was released here this morning. Corn finished 422 and soybeans at 1035. So you're certainly going to want to give us a call, run those numbers, lock them in within the software here and see how that's going to affect things. I guess what we know to start the week, some interesting things came out over the weekend. We will get a WASDE and crop production report from the USDA on November 14th. So that'll be nice to get some data flowing back through the market. We've also, we're in the final push to wrap up harvest. And so we should see a lot of areas getting towards the finish line here in the next week or so from what we're hearing. With that, we also over the weekend, I think, as people have pared back kind of some of the discussions that happened with the trade truce with China, I think we got a little more guidance just on what some of these soybean purchases look like. Justin, maybe give us a few thoughts there as we start the week, and then we'll throw around the room.
Yeah, the White House basically confirmed that, the 12 million ton purchase is to be done by the end of calendar year. And then the 25 million tons per year is on a calendar year basis starting in 26. So I think we speculated that on that late last week. So that makes sense. I think that's the more friendly version for sure. You saw soybeans up, big volume overnight, kind of setback. We're hitting 16, 17-month highs. So we're hitting price levels that we haven't seen since July of 24. So that's pre any kind of trade war 2.0 levels. So I do think it's hard to say that we're cheap or we're at levels that we were like I said pre-Trump getting nominated. Again, I'm excited for it, but I'm cautiously optimistic. I think we're seeing a big change of ownership. We're seeing funds flipping, all these positive things, but we're starting to get into levels I think you have to be cognizant of. I don't know what you guys think. I mean, I'm excited. Like I want a bull market as well, but just trying to be open-minded here. I think if you do have to buy, if you force China to buy 12 million tons, we still have to get the deal signed, right? I also saw some conflicting things of like what the China reported the deal was versus what we're reporting. So I think I'd probably like to see it finalized. And then the other positive thing is we're getting a report on the 14th. So we're going to get crop production, WASDE report November 14th, which, that's going to start that whole conversation up again. What's that going to look like? Yeah, so I guess I'm excited overall. I think there's some exciting things happening in our markets finally.
We haven't talked about, obviously we'll get yield numbers and things like that, Justin. So what's your take on the finish now that we're getting kind of to the home stretch here?
Yeah, my personal take is I think we finished off better than we want to talk about. We kind of had these fungicide stories and pollination issues and kind of some bad early reports, and then the second half of harvest happened, and we kind of stopped talking about it. I think we finished off better personally in Illinois, Indiana, some of these areas that maybe some early reports weren't as good. Better, I mean, I don't think necessarily that they're not coming down. I think they are. I think the Illinois, for example, yields coming down. I don't think it's near as bad as the levels that were being publicized personally.
So
Like, I think there's a lot of guys that are, 10, 15 bushels off from last year's record, but in line with 22, 23 type numbers.
Gotcha.
It's just my take.
Can that get you to above 180 on a national scale?
I think so for sure.
Okay.
I'm above 180, I guess.
You're above 180.
Yeah.
Yep. And soybean side? A little harder.
It's tougher. I mean, but there's, I guess I'd be, I don't know. Soybean one's tougher for me, as it every year is. Like we were close to a record on our farm. I can say that. I think several guys were. But on a national level, I don't know. I'd say within a bushel of the government number, bushel and a half maybe. So I personally don't think there's a giant surprise on the downside, but again, it'd be a surprise, right? If it was 170 something in corn or low, like 50 something, like 50 point something in beans would be super bullish. So I hope it is. I'm not seeing that.
Mm-hmm. Dustin, what do you got for us to start the week?
Yeah, just to continue on that conversation, like anecdotally, I think the first bean yields we heard were phenomenal, especially in the East. Like the early season was just blowing off the top record. And so, we thought maybe there was a chance that we were going to be well above that trend line like the USDA had. I think the last number was 53.5. But a lot of those guys, as they finished, though, it was their later maturity beans, which they assumed to be the best beans usually, did the worst. This is just my anecdotal experience in the East. It's like that dryness in August, actually, it's just from the planting date. So depending on when a lot of that ground was planted, I think it could be interesting how that finishes. But with as dry as it was in August, like that's what you'd expect, right? So I definitely don't think it's going to be on the high end, in my personal anecdotal experience.
Did you say the same on corn?
Not on corn though. Yeah, it was the opposite on corn, right? Early season yields were terrible, and as we finished off, they were like the averages were much better than we expected for a lot of guys in Illinois. In Iowa, like everyone, I think you said it perfectly. Like, your corn yields were off from last year, but last year was a record by a long shot. So it's still above all previous years, right? Wasn't that the case?
Yeah, it's probably in line with like 23.
Yeah, so it's second best, even though it's everyone kind of disappointed because August we had such high hopes and we came off of a really good year. It's a recency bias issue. I think there's a recency bias built into the corn price a little bit. There's no deal on corn. Everyone is disappointed because we're not at the 188 yield projections anymore. We're talking 180s now. That's still a record with the most number of acres since the 1930s. It's still the most amount of corn bushels we've ever had to contend with. So I find that interesting. Like it's like we set ourselves up to think it's bullish because we didn't have the August numbers. We don't know what those are yet. But I did, I think that the marketing year thing, just to go back to the deal with China, there was a lot of people publishing things that were associating the Chinese purchases by marketing year, not by calendar year. We did the same because it was not very clear. The White House clarified over the weekend. That's the bullish thing. So it's 12 million by the end of this calendar year, 25 million through the next calendar year, which includes old crop bushels, of course. Like it would make sense that a lot of those are going to be 25, 26. And so now all of a sudden the USDA balance sheet looks more accurate. So if you take that yield number and you're on the slightly on the lower end, let's say you take a bushel off of that, and we have China kind of fulfilling that, we are going to be talking about a fairly tight carryout for beans. So I think the market action makes sense. And Jack, if you pull up the chart, like this is the monthly chart of beans, lead month beans. And, I want to be kind of careful too here because, I definitely want to have a floor, as you mentioned. I think like it's the highest we've had all calendar year. We don't want to forget that and make sure that we've established a floor. But I still think there's ways to establish a floor while leaving upside open. And the reason why I'm kind of excited about what could happen is that like we've got 2 years of bearishness built into recency bias on beans. And this is the first time we've actually closed above the 18-month moving average. The last time that I remember this happening was where I circled here is 2016. Macri was elected to Argentina. Everyone thought they were going to bring out a bunch of extra beans that they had for years. A lot of majors got caught kind of short beans, if you remember.
Double short.
Yeah, double short. We had this rally from 9 to 12 in a very short period of time. The last time we had China buying beans, 2020, 2021, we had a rally from 10 to 14 in a very short period of time. So I just wouldn't rule out like more volatility as we've been talking about. I wouldn't necessarily say don't go sell your beans because it's going to 14. I'm definitely not suggesting that at all. I'm just saying like keep an open mind of what's possible coming out of this multi-year bear market situation. So
in your opinion, Val's still cheap even with some of the, I know it's upticked in certain areas, but
we had some moves. Val actually dropped following the announcement. And it was actually a good, I mean, everyone was like, what are they going to say? So they're buying options, rightfully so. So option prices dropped pretty fast after that announcement. But yeah, it's been a good move though. So
yeah, I think for what could happen, I think it's way too cheap. Like just saying like what we're doing on our farm, like we've got some sales on, but we've got a lot of options just for that reason. Now it's like I said, I think on Friday, now your bushels, right? This is when marketing comes easy, or it's just a matter of how much risk you want to take. So if you think about it, you have a long position. You are physically long X amount of beans or corn. And it's like, how much do you want to protect? That's it. You know exactly what your bushels are. Now it's just a matter of I'm willing to risk this much if it goes down or this much if it goes up. So much easier than when you don't know your yield, obviously.
Yeah.
Right. Ben, chirping going around that maybe China's in for some wheat or looking for some wheat. What's your thoughts?
Well, maybe they were listening to the war room when we were asked about the wheat question, and we said how much it sucked. 25 cents basically from Friday morning till right now. It's above the 100-day moving average. See if it will incent some more people to cover based on the headlines. 60 to 67 in December is a pretty big resistance. We shipped a lot of wheat earlier in the year, so having a big chunk of sales might get the wheat market a little bit excited. I'm really kind of, we talked about all the uncertainty for at least a month, and the China deal kind of been taken care of for the most part. I think there's some finishing touches to it. Then we get the WASD, and tinfoil hat. I found it odd that they're going to put that out without some sort of reconciliation and getting the government open back up. I would take note of the fact that this has been in the East the quickest basis appreciation from the fall lows to where we're at now since 2019 for sure. That was the wet year. We're shipping a tremendous amount of grain. The only thing we have to look at is export inspections, which I'm sure all eyes will be on that today. But there's a lag a lot of times from sales to shipments. And then you go back to obviously a big part of that is yield. So that should be a pretty exciting day. We start to get a little bit more clarity on where we sit. And Dustin brought up a great point that with the trade deal, the fluff that was perceived in bean balance sheets is pretty much taken care of now. So that's a positive. Corn, I think the yield there is going to be a tremendous influence on our market if it were to stray, a few bushels away from 184. And most importantly, we get to see how much corn we sold. And, that that could set us up. I think we get these things answered for better balance in the markets and a good, 5 to 7 month run in grains that potentially could give us much better opportunity than we had last year.
Very good. Ryland, along the lines of reports, it looks like we'll get our cattle on feed out November 21st. So that's some good news.
Yeah.
What are your thoughts here as we start the week?
Yeah, hopefully we can finally get some, real data to to trade rather than just headlines. And really, there wasn't any over the weekend, so I think everybody was breathing a sigh of relief coming into the day. You ended cash a little bit lower here last week, and beef prices just kind of fell as well towards the end of the week, and you had quite the sell-off. So I mean, it just overall, I think you came in with no real new news. I think you kind of priced in a lot of the near-term kind of bad news, but we're sub all these major moving averages now, and I think just the way the market's kind of feeling right now, just obviously cautious. We've created quite the discount here, on the board, and I think just overall there's going to be quite a bit of volatility left. Like I said, it just feels like the worst is not quite behind us yet, and everybody's going to be a little bit gun shy, I think, just after the moves that we've seen here. So hopefully we see a bit of stabilization, but at this point, cash being 2 to 4 lower in the South, I think that's still better than what most people were saying. So you can kind of find both sides of the spectrum here, just in terms of market sentiment coming into this week. I think in general, everybody's hoping for more of a steady kind of cooler trade overall in cash this week so far. So we'll see if that comes to fruition. And on the hog side of things, we did end higher. So we got 2 days up here, a little bit of short covering. Market's deeply oversold, but right now there just really isn't a ton of good news. Cash market's still falling here, down 57 cents here on Friday, but and bellies were down another $5. So it just seems like maybe we see a little bit more short covering. I mean, like I said, I think the technical aspects are pretty oversold here, but we just aren't seeing any kind of stability in cash yet. And I think you still got to see that before we really start to find some support and see a heavier round of short covering.
Alrighty, appreciate the update there. As always, Rye, we've just came into the open. We got December corn down a half at 4.30 3/4 is the last. January soybeans are up 2 3/4 at 11.18, and December Chicago wheat's up 4 at 5.37 3/4. That's the last there. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so, and it'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a good start to the week, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.